Good afternoon. Today we are doing a video presentation of six people, and our subject is Accounting Theory and Current Issues, H16025. And our group got a topic, and that topic is the effect of IFRS adoption on the financial reporting. And I'm going to talk about the introduction. International Financial Reporting Standard is a set of accounting standards developed by an independent non-for-profit organization called the International Accounting Standard Board, that is IASB. The goal of IFRS is to provide a global framework for how public companies prepare and disclose their financial statement rather than setting rules for industry-specific reporting. Having an international standard is especially important for large companies that have subsidiaries in different countries adopting. A single set of worldwide standard will simply accounting procedures by allowing a company to use one reporting language throughout. A single standard will also provide investors and auditors with a company's view of financial statements. Currently, over 100 countries permitted or request IFRS for public companies, with more countries expected transaction of IFRS could upset. And now I'm gonna call Rakib for more information.
Thanks, Anil, for giving a nice introduction about IFRS. I'm going to talk about the analogy of the IFRS. We develop the arguments for and against IFRS adoption in the context of framework. Our analysis focuses in the IFRS and sponsored by the IASB, and especially explored International Accounting Standard Committee. This is because there is evidence to suggest that our culture different from the IFRS. The analogy that are the IFRS is a both paradigm and paramount shifting in line with financial reporting analogies. The article demonstrated that Australia needs IFRS system and it adopted IFRS system to line with accounting standard in 2004. The adoption of IFRS brought numerous modifications and changes in the overall existing Australian standards. The study is not essential in giving depth understanding, but have the unique adoption in IFRS, adoption and utilization of various countries. That's all my part. That's my friend Anil coming to explain benefits of the IFRS.
As my friend Rakib have described the analogy of IFRS, I would like to explain the benefits of IFRS in international business in depth. Most importantly, it's benefit the economy by increasing the growth of international business, and by encouraging the international investors to invest, it will lead to flow more foreign capital to the country. Also, the foreign capital to the also the financial statement which are prepared using a common set of accounting standard will help investors to better understand the opportunities to invest as opposed to financial statement which are prepared using different set of national accounting standards. It will also help the industry to raise capital from foreign markets at lower cost if they can create strong impact on the minds of foreign investors, that their financial statement comply with global accepted accounting standards, and if same accounting practices prevails throughout the world, it will provide more opportunity to accounting professionals across the world. Now I would like to present Kim to present its part.
Thanks, Ali. Now I will be talking about major international accounting implications of IFRS. From this study, it shows that the adoption of IFRS and its utilization for various aspects such as standard setters, regulators, as well as accounting companies. It offers high quality and effective information, which obviously reduces all the asymmetries in line with the borrowers and the capital lenders. In this case, IFRS offers a more detail and disclosure analogy, which tends to enhance firms' comparability, increasing the better measurement as well as recognition of more liabilities. Now, I would love to call my colleague Krishna, who's going to take over from here.
Thank you.
In addition, the changes that has been invest due to the IFRS accounting standard have been imposed some major modifications that are significant as far as the financial performance is concerned. However, most of this modification caught the various government in aware exciting and the needs to be analyzed of the undertaking method and concept concerning the accounting changes in the process of new format of presentation. The fact is that after the adoption of the new accounting principle, most of the government entities found out that the implementation of IFRS has become more costly as well as the time-consuming role. The analysis suggests that the mandatory IFRS adoptions may be positive or negative consequences for the firms on credit market, for example, reduce of cost to debit, longer maturity, greater loans, less demand for collateral, and more effects like stronger demand on debenture market on the bank credit market. And for the conclusion, I would like to call Ms. Ruchi.
Thank you, Krishna. In conclusion, IFRS adoption in Australia has had a positive impact on the readability of notes to the financial statements, and that there has been no alteration in the relationship between readability and firm performance. The impact on the profitability or the net worth of a company need not be looked at as a favorable or unfavorable or positive or negative, because finally, IFRS is an accounting change and it is different. It gives a lot of insight into the financial statements of the company. Financial statements make it more transparent, and the investors will be able to make a decision which will be a well-informed decision. IFRS could bring in volatility in earnings, and that is primarily because of the fair valuation in accounting which is being brought into by the IFRS. Thus, IFRS has been accepted as a great process, and people have appreciated the use of IFRS. Thank you.